What's going on, guys? Welcome back to another video. Today's video is going to be on lower time frame structure and how to identify the lower time frame from the higher time frame. And a lot of people were telling me that they were getting confused with breaks of structure because they see that in my trading I implement breaks of structure before I look for my entries. So people start getting confused on the lower time frame and higher time frame, and it's all just one big mess. So getting straight into this video, basically on the higher time frame, when you're looking at higher time frame structure, you're gonna see things like this happening. The market is most likely gonna do, it's gonna look pretty clean. The market's gonna be in an uptrend, and it's pretty obvious. Now, so this is gonna be the 4H, what the 4H looks like. But if you go down towards like the 15-minute, maybe even the 1 hour or 5-minute, the 15-minute is gonna look like something like this, where the market is gonna show us a lot of breaks of structure, and then it's gonna go up, keep doing stuff like that. How you can see that the market, broke structure here, it broke structure here, it broke previous structure here, it broke multiple times, it broke structure, and people just generally get confused, like, all right, is the market sells, is it buys, like what is the market generally doing now? So the thing that people don't really understand is these big moves that you're seeing, like over here. These big retracements are simply just the 15-minute version of this higher low. So as we know, in the uptrend, the market is higher highs and higher lows, but people don't really generally realize is that higher lows aren't just gonna look like one line and then go up. On like the live charts, it's gonna look like it's gonna be really choppy, stuff like this right over here. The market is gonna have to go down, break some lower time frame structure, and then go higher. It won't actually end up looking like this. And what people end up confusing way too much is they see like these lower time frame breaks of structures, right? Let me just make this down here. Yeah, people see these lower time frame breaks of structures, and then they start assuming that the market is sells now, but they're completely just being biased towards the lower time frame instead of the higher time frame. Because if the higher time frame is bullish, then we'd obviously want to be focusing on higher time frame structure and waiting for a higher time frame structure to break before we start taking sells. But in this case, we're not really breaking any higher time frame structure. All that's happening is lower time frame structure is being broken. But in reality, it's not like bearish structure forming, it's just retracements of the higher low, because as we know, the market creates higher highs, higher lows, and then obviously on the 15-minute it's gonna look like something like that before we have the impulsive move. Now if we look at the charts, some on the live chart, I'm gonna be taking you guys through this trade I took on USDCAD. But if you look at the live charts on the 4 hour right here, it's pretty obvious that the market is moving down. Anyone can see that the market is pushing down. We're in a sell side market. But then if you go down towards like levels like the 1 minute time frame, and then you see things like this right here, you see that the market broke a 1 minute structure right here. You're gonna start assuming that the market is bullish. People saying, all right, buyers are in the market, look for a demand zone, enter there, and then go buys. And then long story short, they get stopped out. What they're not really realizing is that the higher time frame hasn't switched from bearish to bullish yet. The higher time frame structure is still bearish. And what I mean by that is, if I open a new chart, we can see that the market creates a high, it creates a low, and then a lower high, and then a lower low, right? And then you can say a lower high and then a lower low. Anyone can say that the market is in a bearish moving market. Now, what people start assuming is when we break past structure like this, where the market, created this, I guess you could say lower high, people start assuming that the market is in a buy side market. The structure has changed from bearish to bullish. But what they don't realize is that this move up could simply just be the market coming into like a higher time frame order block, like right over here, in order to go lower, right? You have to take in consideration of order blocks and everything when you're assuming, a reversal in a trend, because this breaker structure isn't really valid. Because if we look at this, obviously it is considered as a breaker structure, but is this a valid like major level of structure in the market? Because we know that we created this high and then the low and then the lower high and then the lower low and then the lower high and then the lower low. Just because we broke past this one lower high, that doesn't mean that the market necessarily has to be bullish now. What we have to do is wait for confirmation. So we'd have to wait for market to consolidate, create bullish structure, and then we could look for buys. Because if we're slowly just taking buys and assuming that the market is retracing just off of this breaker structure, then we're predicting that the market is gonna sell down and then go up. It's because trading is a game of probability, the odds of that being in your favor is really low, right? Because for all this could literally just be a liquidity grab right over here for the equal highs that rest above, and now the market took that liquidity, tapped into this order block, and now it's going lower. And what people assume, like, do a lot is they completely forget about this entire downtrend structure. They don't care about it. They automatically just assume that, you know, because we broke this little, you know, piece of this little piece of important structure, people are gonna start taking buys and buys and buys, and that's how you get caught against the wrong trend. Now, to give you guys a better example, if you go on GJ right now, right, let's go to the replay right over here, and we look at GJ, this move right here, we can see that GJ has been pretty bullish. You know, if we look at the order flow, obviously market is moving towards the upside, smart money is taking buys. Now, with this big retracement right over here, what a lot of people are doing is they get FOMO. They start assuming that the market is going to start selling off, and, you know, this is your chance to get in for sells. And then, you know, what they do as soon as breaks and retest, people start selling over here. You know, people start, you know, just adding up to their sells because they're assuming that the market is gonna reversing, specifically because we broke this little bit of structure right here. But that's not valid enough for us to assume that the market is trending. We'd want to see multiple previous higher lows get broken. So for example, we have a high over here, and then we have we have our low over here, and then we have our high, and we have a higher low, and then we have a higher high. Because we never broke past this higher low right over here, that means that this break of structure right here is not valid. We would want to see the market break past this higher low. Until we break past this higher low, the market is still in an uptrend no matter what anyone says. And the reason I'm not taking this as structure is because you can see the market was just, you know, consolidating, moving choppy. This is pretty weird, you know, the market just moving choppy here and then it pushed up. But instead, this was a pretty clean higher low after the new higher high was made, and then it created a new high, and now the market is retracing to do what? To create a new higher low. So now if you go towards like the 15-minute time frame, as you can see, look how crazy this looks. You know, you have a breaker structure right here, you have a breaker structure right here, you have a breaker structure right here. But what you're not realizing is that until we break past, you know, the overall level, which was this and this is basically our range to look for buys. All these buy side order blocks are valid. Here, valid. Here, valid. All these order blocks are valid. So basically, you know, the lower time frame breaks, the structure that you're seeing, they're not valid until we create higher time frame bearish structure. For all you know, do you see any, you know, higher time frame structure right now, bearish structure? All you see is the market did this. That's it. If the market started doing this on the higher time, and then 100% we would, you know, assume that the market is bearish now. But look, all it did is it came up, it retraced and reacted off of some type of order block inside of here, and after it reacted off of that order block, you can see overall it just started going up again, and, you know, it just continued going up for like 300 pips. And for the people that were selling this, because they saw all those 15-minute breaks of structure, those 5-minute breaks of structure, they're just getting caught on the wrong side of the market, and then they end up getting stopped out. So make sure you're trading with the overall order flow in the market. If the movement is still bullish and all you see is a pretty deep retracement, but you don't see any bearish structure being formed, then don't take sells. Don't assume that the market is gonna you know, come into here, react off of that order block and then sell down. React off of what you're seeing. And for all we know, all we saw over here was that the market created a deeper pullback, right? It created a deep pullback, and after that deep pullback, it just continued going higher. Now, if we go to USDCAD, and I take you guys through this trade that I took right over here, we go to the 1 minute time frame, quick time. So this is another Wyckoff trade that I took. Start from here. So this is the before, if anyone's wondering. This is the before. I was looking to enter at 17125.006. I think I altered the zone a bit, but yeah. So basically what I see is that the market was pushing up, right, on the high, on the lower time frame. We're pretty bullish, right? The market created a nice bullish rally, moved like 50-60 pips, and I was like, all right, bet. Overall, you know, I'm gonna have to wait for this, you know, the lower time frame to switch to bearish, because on the higher time frame I know we're bearish. So that 1 minute, you know, bullish rally that I saw, all it is just a retracement of a lower high to go lower. That's it. So these retracements that you're seeing right here, this is literally just a retracement. So make sure you learn how to differentiate from the retracement and the impulses. So going back to the 1 minute time frame, right over here, I saw that we have our preliminary supply, and then you have the buyer's climax. Now, I didn't know that this was the buyer's climax until we, you know, broke structure. So really, I'm just watching, and then boom. So I saw that we broke structure right over here, and you can identify that by going to the line chart, and you can see right over here we ended up breaking structure. So I was like, all right, bet. So this is probably the start of our Wyckoff distribution. So we have the preliminary supply. I'll go back to candles. Buyer's climax right over here. And then after that buyer's climax, we have the automatic rally to come back and retest any little bit of supply that was inside of here. And then as you can see, this is where the secondary test happened. And then we had our first sign of weakness of coming up about right now. So boom, we had a sign of weakness right over here. The market broke past this previous low, and this was basically my indication that the market is going to be, you know, giving, you know, consolidating for a bit, giving me my Wyckoff distribution before going lower. So all that was really left was my UT and UTAD. So I just waited now, watched how price, what was price doing. And yeah, so right over here I saw that, you know, the market was creating higher highs, higher lows, and in my head I'm like, all right, this is pretty bullish, you know, I don't want to take any sells yet. So I wasn't looking to sell in this area of supply. I wasn't looking at this supply zone over here, this demand, order block. I'm not looking at these levels. I'm simply waiting for the market to you know, give me an opportunity to enter. And for all I know is I'm seeing that the lower time frame is really bullish right now. So all I did is I waited, and then I saw that the market the market broke structure right over here of this previous higher low, and then that's when I figured out that this was potentially my UTAD, or my UT, sorry, my upper thrust. So after that break of structure, we had a second break of structure of this pretty important, you know, low. This was important because this is the initial low that brought us higher. So because we broke that, I'm like, all right, bet, you know, we're probably really bearish. And because we broke past this low, and you know, this is looking really bearish, like without bullish structure forming at all. In my head, I'm like, all right, bet, I'm gonna look for entries here. And I know I haven't seen my UTAD yet, but if I don't, you know, if the market doesn't react off of this level, I'll simply wait for the UTAD to happen, and then a retest, and then a continuation towards the downside. Now, for the people that are asking why was I focused on this level, I think I got this off of the 3 minute. So on the 3 minute, I seen this last down candle before, this last up candle, bullish candle, before the impulsive drop towards the downside. So I'm like, all right, bet, you know, the banks bought here once, they're gonna have to come back and mitigate their buys, and once they close their buys, they're gonna continue going lower. And not only that, but we broke structure here. There's just so much, you know, confirmation for this trade. Now, just to keep in mind, I wasn't looking at, you know, breaks of structure of you know, any, you know, lower lows, lower highs. I was simply looking at breaks of structure of the higher highs, higher lows. I'm not looking at breaks of structure like right over here, or you know, right over here. I'm simply just looking at this movement right over here, because I know that I want to sell. I just have to wait for the retracement to be over, and when that retracement is over, the impulsive move towards the downside is going to come. So let's go to the 1 minute, not the hour, sorry, let's go to the 15, see what ends up happening. Play a couple candles. Market consolidated for a bit. So the market consolidated for a bit, and as you can see, it basically, I don't know why that's there, but it tapped us in right over here to the pip, tapped us inside of this little order block. After it tapped us in, let's see what ends up happening. The market just, yeah, it was pretty bearish after that. Kind of consolidate for a bit, but then, so basically Wyckoff can be really simple. Now you could have used your different ways to enter this trade without Wyckoff at all. You don't need Wyckoff, right? So for example, what I mean by that is, we've seen that if I like completely just, you know, get rid of this, if I get rid of everything here, and I'm just focusing on price action by itself, the first thing that I can notice is that we had this bullish rally happening. After we broke that bullish rally, I noticed that we broke structure right over here. So because we broke structure there, and I look above, I can see that there's an order block right here. So all I did is I waited for price to come into that order block, and then boom, you know, the market ended up selling off for about 13 to 1 risk to 1 ratio. Here's the before. I did alter the zone a little bit because you know, you can't stick to your analysis. Sometimes you just have to alter, you know, look at new things. But yeah, that's basically how I took this trade. If anyone's wondering, you know, have any questions, please let me know. And for the people that are wondering for my mentorship, because I do have a lot of comments about my mentorship, I just want to say that I did start a mentorship and I'm starting a course. So for the people that are interested in that, please leave a comment below, message me on Telegram, it's in the description. And yeah, leave a like, subscribe, share with your friends, and any questions, leave it below and I'll get back to you. Thank you guys for watching and have a good one.